Hello everyone, welcome to iLEARNHOW. My name is Vincent and today I have an exciting video for you guys. I'm going to share with you the three main groups of chart patterns that will include the reversal patterns, continuation patterns, and bilateral patterns. Reversal patterns when you are trading, continuation patterns when the trend is going, continue to go in the same trend as it was going, and bilateral patterns where the trends can go either way. At the end of this video, I expect you guys to have learned how to use all of them and use them in your trading plan, and how to trade them in any way and be able to actually master the patterns themselves. This is going to be exciting for you, and if you are a newbie, and this is actually for you. Without wasting time, we'll get into the charts. We'll start with the reversal patterns, and one of the most famous reversal patterns, we have the double top and the double bottom. Let me shift the screen right now so that we can all see everything that is here. All right, I'll put myself here. What are the reversal patterns? Reversal patterns are those chart formations that signal that the ongoing trend is about to change the course. So if a reversal chart pattern forms during an uptrend, it hints that the trend will reverse and that the price will head down soon. So looking at the double top and a double bottom, patterns that either in the bullish momentum or in the bearish momentum. For a double top, it forms after the bulls have taken over. Until now, we get a consolidation at the resistance line, and then how you trade it, you wait for the neckline to break, and then you put an entry, and the stop goes above the neckline, and you target to the bottom where the bulls have taken over. And for a double bottom, it's the same thing. Yeah, now let's look at the reversal pattern number 2. That is the head and shoulders. We already talked about what these patterns do. Head and shoulders work a similar way to the double top, where it's also either in a bullish momentum or bearish momentum. So trading, they both have a neckline where you enter the trade after the neckline has broken, where you place your sells and then now put the stop above the neckline and target the move down to the bottom where the trend from started from the bulls. And in inverse head and shoulders, we have a similar kind of pattern. However, this time the bearish have taken over, and it's a reversal pattern where the bulls are taking over control. In terms of targets, it's the same thing as you have seen with the head and shoulders. Reversal pattern number 3, we have the rising wedge and the falling wedge. Here you can see the bulls are taking control, and then we see a consolidation where there is actually a contraction in terms of price, less volatility, even more, and then that's where the market will reverse to the downside, and you expect to take an entry below this level. This is below the previous low, and then you place your entry and target actually the this pole here. You call it the flag pole. Because this is also a rising wedge, it looks like a flag as well. So with the falling wedge is the same thing. It's an inverse flag, and you also look at where the market now has lost the steam, no more volatility, and you place your entry above the previous lower high, and then you take an entry and target the top of the pole. There is a chance that things might not go your way, that you might actually lose. Actually losing must be the first thing that come to mind, that should I lose? This is how much I am willing to lose before you even start trading. So most people are only looking at the target, meaning they are only looking at making profits instead of actually looking at how much they could be losing. And immediately once the trade is at a loss, people are not able to cut the losses because they never planned ahead before entering the trade how much and where exactly they're going to stop. So in essence, when you are putting a stop loss is you put it where you know that the trade that you are entering is now invalidated. Should now this market goes to the upside, this rising wedge we're expecting to break to the downside, it means it's invalidated because now the move went outside the wedge and also opposite the direction that is expected. So whenever the move is invalidated, you want to be outside of the market and be watching. So the falling wedge is also a similar kind of pattern as the rising wedge. It's just that you'll see it on a downtrend and then hoping or expecting the move to the upside should you see this kind of formation. Another form of chart patterns are continuation patterns. So unlike the rising wedge where the market or the structure now turned back in the opposite direction, continuation patterns, they continue going in the same direction as the trend. You see now this is a bearish pennant. The market is bearish and it forms a pennant here. Now instead of reversing, the market continues to the downside. So when you see a pennant like this, you know that the market, should it break, you need to enter because it's a sign of continuation. There is also a bearish rectangle and also a rising wedge. Just from, you see a falling wedge, this one is a rising wedge. So you must also just go back to the video, repeat, watch it again and again until you understand each one of them, how they operate. You can see the kind of stops where we put the stops, and in all cases you see that the stops are put where the trade will be invalidated should the market pass or cross that level. And another continuation patterns, we're looking at the bullish pennant, the bullish rectangle, and the falling wedge. Continuation chart patterns, they signal that the ongoing trend will also resume. So you can see here that the bullish pennant, after it broke, the market continued to the upside, where the bulls are actually taking control, where the buys continues. So if you took a buy somewhere at the bottom here and you see this kind of formation happening, you can expect the market to continue to the upside. So you don't have to actually take off the profits, and you can hold the trade if you are a swing trader and maximize your profits. Looking at the falling wedge, we've already seen the rising wedge in let's see, in a downtrend. Now it's in a uptrend. So they actually work in the same way, it's just going in the opposite direction. Another form of chart patterns are the bilateral. So bilateral chart pattern signal the price can move in either way. So you see the market can either go to the top side or the bottom side in all these three triangles. So when you're trading this ascending triangle, descending triangle, and symmetrical triangle, you have to always expect the move to go either way. Unlike the previous patterns that we discussed, this one needs some caution when you're trading it. So These are the 3 chart patterns that you only need to know. Once you know this, you can now conquer the markets. And that is all. And we're going to now look at live examples where we'll see all these patterns. Welcome back, guys. We are now within the charts and we're going to be looking at the US dollar, Japanese yen. Okay, looking at this chart of the US dollar, Japanese yen, we're going to zoom in a bit so we can be able to notice and pick up those chart patterns we talked about. Just want to zoom in a little bit so that you can be able to see properly. So this is the first one, the ascending triangle, spotted as a continuation a pattern. So we're coming down from a downtrend, the top side, and now we form the triangle, the ascending triangle. So now after the formation, it breaks to the upside and continues in the trend. You see how easy this was? So once you know about this kind of trends, once you know about this kind of patterns, it's now easy for you to trade. You can anticipate the moves and lock and load your trades and start to profit. So let's move on with it and see what else is there. There's something that you should also notice, that whenever the market is moving to the upside, it always stops somewhere else and consolidates before it makes moves again. So you can see there was another flag, mini flag happening here, and then there was a move to the upside, and then now we look at a symmetrical triangle. So we talked about this symmetrical triangle. We said that this is a bilateral pattern where the move can be either continuous or it can go backwards. So looking at the triangle itself, you can see that you can expect a move to the downside or a move to the upside. So when you're trading this, you have to wait until there is a breakout outside of this triangle before you actually, lock and load, before you put your buys and your sells. So now you can see it live on a daily chart where you could be trading or taking opportunities. So we go in and now see that this is actually a bullish rectangle where you see the move to the upside, and now after that there is consolidation where it is locked in a rectangle, and there's continuation. So this rectangle is bullish because it's now coming from the bottom from the bulls, and it continues to be bullish again. But there's a possibility that the move can also go either way. So you have to also be careful, but there's a high chance that it will break to the upside. So in most cases, when you see this pattern, you need to trade, expect or anticipate continuation to the upside. So also we see a bullish flag. So where after the break from the rectangle, you see a move coming down, but slowly coming down in consolidation, and only to break. This is more like a wedge a wedge. So going downwards only to go up. So it's also a continuation pattern. So that's how you actually get to see them live on a chart, and you can also trade them. Remember, right now I'm looking at a pattern where there is actually, I'm looking at a chart where every candle represents a day, but this can be spotted on any time frame, and you can take advantage of it when you do. So now we are also seeing the symmetrical triangle, and what you remember about this, that the move can go either to the downside or to the upside. In this case, since we are on an uptrend, it was also serving as a continuation pattern, and the move continued. And we also see a double top in a way, seeing that there's a move here. There's a top. Let's do this. Maybe let's use this tool where we see a top here and another top there, and we can look at this or that as the neckline, and then anticipate maybe a move to the downside to this level, and then let's see, exactly on the money. That's where you will have taken profit. So this one, you remember we started with it a double top, that whenever you see it, is actually showing you that there will be a reversal. So you remember that we are on a bull market, and then people, they have their buys in after the symmetrical triangle. It actually shot to the upside, but now it got to the top where now there is consolidation around here, and it formed a double top. That is a sign of reversal. As a reversal pattern, then it did reverse to the downside before it formed another symmetric triangle which shot to the upside. So these patterns are always forming. If you are looking for them, you will always find them, and then take advantage of them. So let's continue and see what other patterns you can find. Now we're on a bearish trend going to the downside, and we see now that we have another descending triangle, which is also a continuation of the trend. If you took the cells, the move will actually, now you see this eventually break to the downside, and most cases you see a retest. This happens a lot before the move to the downside, and you take in the profit. Most people, when they see a reverse going backwards, they will actually be scared and get out of the trade instead of holding. So this is very typical of triangles when they break out, especially in a downtrend or an uptrend. You will see the same level, because now this is a support in a way, and now once it's break, becomes resistance. So it's a break and a retest, then you expect the move to the downside. It's a continuation. Let's move on. Hope you guys are getting the hang of this. So here we have something called a treble bottom. There's a double bottom, treble bottom. So it's also another signal of a reversal pattern. So where you also have something like this, and you expect the move to the upside, especially that the move now, this was a downtrend, and then this will reverse the trend to the upside. So I hope you guys are getting very educated with this kind of patterns, guys. Look at the move, the explosive moves back to the top side, which reversed this downtrend. Now the bulls taken over this thing. So let's continue and see what else we have. We got another double top, and then what did we say about double top? Is a reversal pattern. Whenever it happens, you know that now the bears are taking over, and then once it breaks the neckline, it will continue going to the downside. So I think now it's just become too easy for all of you to actually follow, and I'm sure you can now start to see patterns. And we have the head and shoulders happening here. We have them move to the upside. The bulls are taking power from the bears, and now we see now the bears are fighting back and forming this, and the break of the neckline is a reversal pattern to the downside. So you see, when you should wait for the whole thing to form and wait for the breaking of this neckline before you start placing your sells. I think I might have covered just about all the patterns that we need, and then if you still don't understand, you can leave a comment at the bottom. I think we have actually made the video even longer than I have anticipated, and you know, you can also go and practice these patterns and take advantage of them. These chart patterns, there is a lot of them, but today we covered only the most important ones so that you can learn to start trading. And if you check, this actually works hand in hand with the support and resistance that are plotted. So you see, this is happening at a resistance, this is happening at a support. So bear in mind that they work hand in hand, and they cause, or they give you some form of confluence whenever they happen. If you like this content that I'm creating on this channel, please remember to like, subscribe, and let's continue to build this community. And there will be more content that is coming for you guys. Leave me a message at the bottom at the description if there is anything else that you would like to communicate with me, and I'll be sure to reply to your messages. Happy trading for now. I'll be creating more videos, guys, for you. My target is 100 videos in the next coming 3 months, and all this is to teach you guys my experience of the market and how you can use it properly to actually limit the risk that you usually find when trading the market. I hope everyone trades successfully and happily. Have a good one.